Hi, it's Kevin May, Editor-in-Chief of PhocusWire, joined here, thank you very much, by Fritz Demopoulos, the founder of Queen's Road Capital.
So hey Kevin, how's it going?
It's great. Thank you very much for spending 5 or 10 minutes with us. You know, I've heard you sit on stage at many conferences over the years and talk about the trends in the investment market and how it relates to startups. I mean, it's 2018, we've seen a lot of things going on, not least in the companies that you've invested in, their sectors. What do you think, just generally, first of all, of what is the investment market? What's the kind of the health of it or the unhealthiness of it?
You know, I think the health and the unhealthiness are probably the same thing, frankly.
Right.
There's a lot of capital.
Yep.
It's a great time to be an entrepreneur, but at the same time, maybe there's excess capital and that leads to excesses. And we see a lot of reckless entrepreneurs, we see a lot of reckless investors, and sometimes that has a negative impact on some of the more disciplined companies out there. And it's like a zero-sum game, because if you're a smart, disciplined entrepreneur that doesn't want to have super negative unit economics, for example, you know, what happens is your crazy competitor might want to do that in order to gain share. And sometimes that can have an impact on your ability to access marketing channels, hire amazing people, and maybe even raise a subsequent round of financing. And so those excesses sometimes, and the recklessness of certain types of entrepreneurs, whilst that may be the smart strategy, could be, that does have a negative impact on the ecosystem.
Is that something generally in startup land or something specifically about travel, do you think?
I think it's generally in startup land.
Yeah.
Travel, actually, and what I would say is travel is a little bit better, I think.
Okay.
And the reason why is the travel category is generally more understood. It's better understood than many of the other subcategories like fintech or e-commerce and stuff like that. We have a number of public companies within the travel space. This has been an industry that had some of the first e-commerce companies when Expedia started in 1995, and some of the other companies in Booking.com in I think 1999 and all that. And so in any category or industry that's well understood, you tend to see less recklessness because you can't get away with it. People don't accept it. Investors don't accept it.
Yeah. Which does therefore make it healthier, at least.
Yeah, relatively healthier.
Yeah.
You know, sometimes you have to take a risk. Sometimes you have to burn some money to go from A to B. Makes a lot of sense. But you have to be I think entrepreneurs that are more thoughtful about it and like recognize that they're taking certain tactical risk is probably better than some of the recklessness we see. Unfortunately, there's a lot of nuance here, right?
Yeah.
What may seem like a very smart strategy may seem like an idiotic strategy if it doesn't work 5 years from now.
Right, okay.
It could be.
Now, do you think we've learned as an industry there about becoming healthier? Because, you know, let's say 5 or 6 years ago, we saw a lot of startups coming and going with very similar, you're thinking of flash sales sites and trip planning, and many of them got very heavily funded, let's be honest here, and a lot of those didn't make it out the other side. Do you think as an industry we've kind of grown up a little bit and we realise we've been better at identifying the opportunities rather than just thinking we can create the next big thing?
I think certainly when it comes to parts of our industry, it's well understood. And that's mature, healthy, less reckless. That relates to, for example, how to monetize, unit economics, marketing margin. However, like any large industry, we have new entrants on the edges. If you go to any accelerator or incubator or startup studio in the world, they're bound to have one travel company as part of that portfolio. And that company, frankly, is probably going to be a trip planning company. Or it's going to be some sort of city guide or restaurant guide, or maybe it's a purveyor of local tourism activities. And, you know, frankly, those people on the edges, they may not be industry insiders. Now, that's not to say, I mean, most of the great startups don't come from industry insiders. That's for sure.
Yeah.
But industry insiders, they've seen a lot. Like if I told you today I have this great trip planning idea, you're going to think that I lost my mind. What I don't get it. Versus the other 100 that have been out there. And so that's the advantage we have as, I think, as insiders, is we see a lot of interesting companies and we can connect the dots. Maybe the small negative with insiders is sometimes we may not think outside the box as much as an overambitious new entrant that may not understand the immense risk he or she is taking.
Right. Okay. I think it was CB Insight, somebody like that, was talking about there had been a general slowing down of Series B and Series C rounds over the last, this is generally, over the last few years. I mean, one, is that correct? Do you agree with that? And two, why do you think that is?
Yeah, we see certainly in the very early stages, we still see a lot of punters. Every wealthy doctor who has a little cash to spend or burn, depending on how you look at it, everybody wants to get into the game. And so that's one side of the barbell. On the other side of the barbell, we see companies that are doing well get their unfair share or their unfair access to capital. Those are the growth companies. Those are the Series Ds, the Es, the pre-IPO rounds. And in fact, those companies, those valuations tend to be even higher than even the public peers. And then and then in the middle, that's where I think that's what you're referring to. You know, the B rounds. In fact, in some countries, even the A rounds are a little bit thin. But the B and C, you know, that's a bit thin. And I think that's partly because there is some uncertainty whether these companies can break out. And
so they get to a certain stage, but are we going to risk investing a Series C to take them to the next level, or are they just always going to be?
Yeah, because like if you think about it, you know, a company has a few phases. There's the concept phase, there's the initial traction phase. That's the honeymoon phase. We all love that, right? Who doesn't like a honeymoon? Who doesn't like the beginning of an adventure, like in Lord of the Rings, right? Right when they're leaving Hobbiton, everyone is excited, right? They haven't yet met, you know, the orcs and the other evil creatures. Everyone is excited.
Okay.
But then you start meeting the evil creatures. That's kind of the you could say that's the growth. That's the growth hacking phase, right? You know, trying to get some traction, and that's very difficult. And then when you get on the other side, you know, you have the queen waiting for you to give you a big kiss, right?
Okay.
You know, and those are the later stage. And so that middle period, you know, it's just much more difficult. Investors sometimes are very cautious. It's very uncertain who's going to win. And you know, from an investor perspective, hey, this company's been on their adventure for a couple of years. They've raised some money, but that traction is a little bit uncertain. You know, the orcs are eating at them, all the other goblins, whatever it is. And so everyone's on the fence. And, you know, we've seen that a lot. And I think what CB Insights is referring to is just a little bit more accentuated these days.
Yeah. To continue the metaphor, I mean, many companies will end up dying at the bottom of Mordor or something like that.
Yeah, you know that hot, those hot lava flows. Yeah, it's going to be difficult to escape that. So as investors, one of our advantages is we can invest in a portfolio. We can work with a number of companies, and so having a portfolio and coupled with industry knowledge and insights and exposure, we hope maybe we can make some smarter bets than maybe the average investor, and hopefully we can reach those successes.
Okay. Hottest sector for you right now, do you think, in travel?
I mean, I still love the local tourism activity space. I love models that focus on mobile. I love models that focus a lot more on experiences, which is a subsection of local tourism activities, I think. It's very hot. There's a lot of action. But what's very, very interesting is online penetration rates are still extremely low. And so consumers haven't even figured out this is an amazing way to discover and purchase travel services. And as consumers start recognizing that, and the marketing works, and we've been educating consumers for a long time, that's just going to get hotter, I think, and just pick up. Frankly, the barriers to entry may be a little bit lower. And that's the challenge for the large operating companies today.
Yep.
We're having a constant battle, but that's fine. But I'm super excited about that. Mobile applications that relate to selling experiences. We like that a lot. There's been a lot of talk about recommendation engines and using new types of algorithms to personalization to predict what consumers like. That's interesting. The activity space could be interesting, but we're in Amsterdam. No matter what the recommendation engine says, people want to go to the Rijksmuseum and they want to see a Rembrandt or a Van Gogh.
Heineken.
Right, and then they want to have a Heineken or an Amstel or a Grolsch, I suppose, if there's some nuance there. And so there's a natural limitation to what maybe that personalization can provide for a large subsection of the market. Certainly the overpaid Silicon Valley engineer who has nothing better to do may want to dance with a samurai warrior in some village thinking that's an interesting experience, but frankly, most people don't want that.
Yeah, I think it is the Rijksmuseum, the Heineken Museum are the two top attractions here, I think, aren't they? And
yeah, right.
They funnel most of it. So, Fritz Demopoulos, thank you very much as always for joining us, and see you again. Thank you.
Kevin, it's great to be here. Thanks.
Thank you very much.